Hey everybody, Marty Missouri, good morning. Once again, I'm going to keep this very quick. I just got off the phone with a client, second one who has reached out to me directly for a one-on-one discussion about what's been going on lately in the market. Call it hand-holding, if you will, but nothing panicky, just, I want to hear it from the horse's mouth. So we had a good conversation. I reiterated a lot of what you're reading and watching on the blog. But something came to mind, and I explained some of the dynamics on an intraday basis and thought I could share that with you. I think it can be very instructive. So what you have in front of you is today's chart of the Dow Jones Industrial Average. And I want to just walk through the ups and downs because, folks, this is actually what's going on. I mean, we can talk about interest rates, we can talk about algorithmic trading and short derivatives trades all day long. But this is really what's happening. This is what's moving the price. And so the market opened this morning and the Dow opened with a nice gap higher, paused for just a second. I think it was up about 350 points at one point. And there a wave of sellers came in, overwhelmed the buyers, pushed the market down right back to where it opened. There, buyers came in, overwhelmed the sellers, right back up to where it peaked out. And you can see what's happening. Let's sell. Let's buy. This was our resistance. We're going to sell that. Oh, we're feeling optimistic. A lot of money out there. We better buy. Money comes in right there, pushes it back up. So here you see the buyers overwhelming the sellers. Here you see the sellers overwhelming the buyers. That would be called a triple top on any chart. And there you see the market give up the ghost down here. But we had this level of support where people made money from buying. They did, but sellers came in much sooner. Lower tops, a little higher there, but this right here, if you go through that top right there, that's a downward sloping wedge. It's a bearish pattern. Gave up the ghost right here. Folks who bought here really regretted it all the way down and probably vowed that, my goodness, if it can get back to that point where I bought, I'm sure going to get out. So buyers came in, overwhelmed the sellers, had some gyrations in here, got right back to that old support, and boom, it became resistance, of course, because there were buyers here who got it handed to them. So they got out there. Here's some support again, new level of resistance, sell it off, support, buyers coming in, resistance, support, buyers, sellers were more inspired here. The buyers were more inspired and so forth. So we finally got down to, I think, where we were down about 500 points on the Dow. In fact, in that conversation with the client, when we started talking, the Dow was down about 500 points. We didn't talk that long, and by the end, the Dow was down about 130. And as I speak, the Dow's up 22, but it was up 200 not that long ago. And this is like a 15-minute delayed chart. So for the most part, buyers rushed into the market, pushed it up here, and then a wave of sellers came in here and said, thank you very much, I'm going to take some profits. What we have here, folks, is short-term traders. In here, they're kind of swing traders. They're buying and selling. We want these channels that get created. Right now, you might say we have the beginnings of an upward sloping wedge. I wouldn't put my money on anything right now on a short-term basis. These are just folks who are exploiting the uncertainty that's been created by some of the things that we've already discussed on the blog. It is inconsequential to what we are trying to accomplish here at PWA, and that is to position client portfolios in the most legitimate way based on what we see in the long-term data, both the technical trends as well as the fundamental economic data. Right now, that inspires us to be cyclical in our sector weightings, growthy, if you will, not too defensive. When the data tells us a different story, when the trends begin to break down on a longer term basis, and when the macro data says that probabilities going forward suggest that the risk is to the downside in terms of the economy and the markets, then we're going to be emphasizing defensive sectors in our client portfolios. That's how you do it if you're a long-term patient investor. If you want to exploit the short-term gyrations, that particularly after a period where we didn't have any, these folks are finally getting their day. They're trading it like crazy. We can't let that get into our heads. If you're looking at your stuff every day, which I illustrated for you is one of the big mistakes individual investors make, if indeed it inspires action. If you think long-term, your eye is really not on the day-to-day fluctuations or even the week-to-week or month-to-month fluctuations. It's on the overall greater, grander landscape, if you will, And right now, that remains pretty positive in our view. So we're going to continue to act on that until conditions change. Thanks, folks, as always, for watching and listening. I hope that was somewhat instructive as to why the market can get so crazy on an intraday basis. And anyway, I can keep repeating myself, but I'll just leave it there. Thanks again. Talk to you soon. Bye-bye.